Hello, everybody, and thanks for joining us in today's episode of Trade the Chain. It is August 1st, and it's a Monday. New week, a new month. We just had we had like a whole triple closing thing on the charts last night. It's pretty good. But, a lot of optimism as we go into the second half of summer, which I still can't believe is half over now. The markets, big pump last week on BTC, been holding sideways, range bound pretty much. I know a couple people that just closed some nice shorts in the last hour on some downtrend trading. So, we're going to kick it in. Got Nick here with us. How you doing, Nick?
Doing well. I am finally done with my move, which has been sitting in front of me for the past 4 weeks. It almost felt like I had, way too much leverage sitting there. Those nerves, the anxiety of just get it over with. So now that I don't have that, I have a feeling I'll be trading a little bit better and hopefully thinking a little harder. So if anyone has made money on my analysis in the past month, let's hope it goes up tenfold from here.
That is right. Nick has made the big move, man. Congrats, buddy. Anybody who watches this show regularly knows that the background behind him is a little different, but still has the same stuff. I like the Steelers and I like the North Carolina Woods.
Yep. I got my degree North Carolina, and then the Steelers. I also have a fan now, which is nice, and there's carpet in here, so there's less echo. I don't know if anyone remembers when we first started and Alex let me actually go live with TTC. There was nothing in the room. It was all wood. I had to go buy like sound buffers to tape to the wall. It was quite the endeavor. So we're looking good. Very, very easily set up in LA now. So
very cool. Folks, I say this before every show, if you are not subscribed to the Trade the Chain YouTube channel, go over there and do so, please. Nick does a Monday through Friday a short live daily piece. Doesn't take up much of your time at all, but it packs a lot of information into the little punch. So definitely head over there and check it out. If you're not subscribed to this channel, please do so. And don't forget to smash the like. It helps us out. And that's all we ask for. But in the meantime, we are going to head over to the markets. We'll go with the overall market right now. About 1.06 trillion on total market cap with exactly a neutral sentiment of 50 out of 100. Bitcoin is trading at 22,966, down a bit for the day, but only recently. Slightly bullish sentiment, but neutral, thus the same, 57 out of 100. We got the social media. We got hottest on. We got Chili's banging it up. They just did a deal with, first of all, they're involved in the Premier League, and a lot of Barcelona news coming out today for all you football fans over there in Europe. Chili's does handle a bunch of stuff in the soccer world, up 382% on the social, 14.23% on price. We got Bean coming in. Just up slightly on price, but 246% increase on the social. We also have Filecoin. Haven't heard from Filecoin in a little bit of time. We actually did a project review on them some time ago. Some good bones to that coin. Down 15% right now, currently in price over the last 24 hours. We got Hive on the topping the list of price gainers for the 24, 61%. Chile sitting there fourth at 14.23% that we just went through. And we have AMP on the bottom of the most bearish coins in sentiment today. So very interesting on that. But if any of you are following, the reason AMP is bearish is because of Binance US announcing that they are delisting it based on the SEC's claim that is security. We'll go into more on that after Nick goes over the charts, because if any of you saw the tweet that I did yesterday, it has to do with market downturn towards regulation. Here we look at the 1 hour price chart. We have everything down for the hour, but only slightly. Not so bad, so we'll take it. But we're going to go to Nick for the tick by tick of the charts and what's going on, what we can expect. And we still have earnings season.
We still do have earnings coming up, although we did have probably the biggest pieces of earnings last week. Well, actually, I don't want to spoil too much because we have some good info coming in the newsletter. And I definitely want people to check that out. But earnings last week were, I mean, better than expected. I mean, it depends on how you look. And I actually wrote about this in the newsletter. There's a yin and a yang to earnings. There's the earnings themselves, which is past, and then there's the guidance, which is the future. And so if you're just trading on the past, the market doesn't look back, the market looks forward. So it's very, I hope everybody's learning as we continue and flow through this, because we're trying to give macro and microeconomic takes in relation to how this is impacting crypto. None of this is easy, but of course, we love to do it. And we do have some more. I think we have PayPal coming up this week. We have some discretionary companies. We have oil companies reporting. So hearing their thoughts about Q3, Q4, that's kind of the big driver of inflation here. So that'll be interesting as well. But as it pertains directly to the charts themselves, I think the scariest, starting in the 1 hour. So the reason I closed shorts here is because, I'm not betting on it completely slicing through, and I'm taking scalps right now because we are at precarious levels where we still could potentially fly higher, but we definitely have an equally solid chance of moving lower given the current condition. So last week we ended very positive. We flew higher into the later into the weekend. Jerome Powell basically told us that the data is going to matter greatly. They're basically going to depend on the data moving forward, which means that he's telling you that they're going to react to the future numbers that come in. We're not going to have another Fed meeting for a couple months till late September, but we will hear from Fed governors in between them, and their opinions and outlooks will depend on the data that then comes in. So we basically—
hold on a second. While you throw up your charts on the screen, let me ask you about MicroStrategy. Interesting that they have earnings coming up. What do we think MicroStrategy earnings are going to look like?
So to be honest with you, I've never really looked into what they do. Nor have I really cared, because at this point they have so much damn Bitcoin that they could literally make $1 billion and people would still be tracking Bitcoin progress in comparison to their balance sheet. Because I think they're down $1 billion on their Bitcoin investment. I think they hold like 3 or 4 billion. So, I would expect them to probably post something more lackluster. I think they do basically like decentralized computing.
They do intelligence. They do computer intelligence.
Yeah. So I'm assuming that the market in that sector is probably not entirely down. But I don't think anyone really cares about their core business with how much Bitcoin they have on the balance sheet. So if Bitcoin has actually been improving, so I guess earnings is different than their stock price as well in this, because of how much they hold in the balance sheet. So you know what? I'm not even going to pretend like I know that answer. I'm just going to legitimately, honestly say I have no fucking clue. And I'm sorry for those who are depending on me for that analysis, but
let me ask you this: if you were to give guidance on a BTC ETF, what do you think that earnings report would look like?
I mean, again,
down.
Contextually, I'm like, there's way too many variables in my head for this conversation, and I'm just gonna have to play the answer that I firmly do not know. I would prefer someone tell me they do not know than give me a bullshit answer to my face. So that's how I'm gonna play it here.
All right, good. What do you have for us as far as what our outlook can be concerned? Because we went through earnings last week. We had very mixed signals, very mixed action. Negative news turned out to be positive for the markets. Positive news turned out to be negative for the markets. We're going through August, which is going to be a quiet season until the Fed returns back in September, as well as it's typically a quiet season on the street anyway, both crypto and equities otherwise, because it's part of the 6 month vacation cycle, right? So are we setting ourselves up for a low volume range bound play until September, or are we looking for some action? I believe it's going to be sleepy time for a little bit.
So I'm still torn on that because I do want to see earnings, and I think that the unemployment information that comes in this week or this Friday is going to be important as well. I remember last time we spoke that we discussed the possibility of 28K, 30K BTC, potentially up to 2K ETH. And I think, at this point, it's going to get much harder to decipher that. And I think that's why short-term trades are going to be the best way to take it, unless you have extreme conviction one way or the other for a multi-week swing trade. Basically, at the end of the day, everybody was looking towards tech earnings and FOMC. FOMC came in as expected. Fed said they're going to be data dependent. Earnings weren't bad, with decent guidance moving forward, with the possibility that inflation is topping. Now, that should basically open the dam, so to speak, in terms of money flowing back into risk. But there's going to be a wall that all of that money hits, because eventually people are going to take profits that are underwater, and B, the market makers are going to say, where's the best risk reward in pushing things based on the future inflation outlook, because we do recognize that things could potentially get worse as we look into Q3 and Q4, and the market's not looking to tomorrow. The market's trying to look 12 months ahead, and in this case, as far as it possibly can in terms of the inflation metric. So as it stands, we should more than likely at least begin to form a range that we've currently carved out, which means that the 4,200, I would be shocked if the S&P cranks above that, if we do end up moving higher from the current position. And it would very much shock me unless inflation started rising again, or Jerome Powell is recognizing how poor the Fed has handled things so far, both which would send the market into a tailspin. It would shock me to see the market under 3,900. I'm talking about the S&P futures 390 on SPY by the end of August. Now, I don't want to start talking about what September and October are going to look like, because that's way too far in advance, especially for the way that we like to trade. But it does make sense that we form a range at least for the month of August into September. If we don't end up, absolutely cranking higher, which I think the likelihood is becoming less based on the reaction today. Like, if the markets probably should have cranked higher today, if we were really moving higher. And that's why it makes me think that we're at least forming some sort of local top, likely this week.
I want to go to stick on the federal level for a second. I just, back to what I mentioned at the beginning of the show with AMP, and how sentiment is sharply down on that coin right now. And that's kind of because Binance US has delisted to the SEC, considering it a security. And then, of course, last week we had the whole suit against Coinbase with, saying that 7 of the 9 coins that were mentioned in the insider trading issue they were considering a security as well. I'm concerned here. I'm concerned here because now with everything that's happened over the last 4 months, and the collapses and bankruptcies of a handful of companies, major players in the industry, I'm scared that the market is going to risk downturn because of this blanket, regulation that's about to hammer us. Where do we see this ending? UK just put out a bill to get passed that limits people investing only 10% of their available investable money into crypto, and banning all sort of referral programs amongst crypto companies in general. I see this as the beginning, and I'm worried.
No, I think it's a good point. I think the stablecoin regulation discussion, there's been a bunch of confusing aspects, and I get text messages anytime that there's a headline about regulation. Someone asks me, "Is this real? Is this real?" And you know what, unfortunately, you know, Alex and I don't have any senators on speed dial, so we can't get that information immediately. But it does seem like if regulation is to come, it would likely be passed in Q4. And then we also recognize that Q4 could be potentially poor for the performance of, you know, risk assets, both equities and crypto, due to, you know, impending inflation, you know, oil and energy issues, you know, in the Eastern Hemisphere, along with the fact that, you know, we may be going into we may have our first kind of holiday recession, quote unquote, coming up as well, which, you know, people may be spending, you know, pushing spending in various directions to both make ends meet and try to find that holiday cheer. So we have a very interesting, I think, Q4 coming up. I don't want to say Q3, because Q3 I think is going to be, like you said, a bit quiet in terms of like market making news, but we're going to hear a lot of whispers, and I think the hammer or hammers may come down in Q4. So I definitely, anyone who's discounting regulation is foolish. But anyone who's completely baking it in right now without understanding what it's going to be, I think is also running a fool's errand. And I think that, you know, is why it goes very well to your idea of a range-bound summer that is very, you know, both predictable and, you know, a consolidationary, for lack of a better term. The market is just, you know, ping-ponging around, figuring out fair price for the time, and then digesting future data coming in. Obviously, if the SEC is going back on their Coinbase agreements, and now Binance is dealing with the same things, the SEC is clearly, you know, putting their foot down. They're trying to draw a line in the sand. So you know, you can't factor it in 100% because we don't know the full story, but we do know something is coming on the horizon, and I think that is certainly a reason to not be overly bullish or expect, you know, completely, you know, brand new sky high prices beyond what we discussed, because I don't think that the market is going to be able to price in euphoria, full euphoria, with the potential of a government, you know, hammer, or, you know, shackles, whatever you want to say, you know, coming down the industry.
Yeah, you know, here we have AMP price to sentiment chart up, down 6.5% on the 24 hours right now. But, you know, this is a great example of, you know, we were all let out into the playground to play as much as we want, and we ended up smashing up all the playground equipment. So now the teachers are coming after us. We screwed this up ourselves. This is going to go down as the year of the screw ups, and there weren't that many children involved in this year's screw ups. So we did it to ourselves. I have to say, and now we got to pay the price for it, and it's disparaging. I see some charts queued up. I do want to say one thing. We got to talk about the merge trade. Now, Ethereum down now, but it's down with the broader markets. The one thing I got to say is I'm getting, by the day, more bullish and more bullish on Ethereum. And it's I'm getting a little excited here. I've never been this excited over Ethereum. Nick, what do you think? What do you think we got going on with Ethereum as we move into the last? I believe it's only one mainnet finality before we go into the September merge.
Yeah, so there's an upcoming, you know, final. There's like a pre-final stage that I think is coming between August 6th and 8th. Which is the end of this week. So I mean, there's many stages. So there's two sides of the story. So there's the aspect that if the merge is complete, then we obviously begin the steps to move to proof of stake. It's not a proof one and done, but ETH 2.0 is very much, you know, that's you have to get there before we completely move to proof of stake, and of course everything has to cooperate and work. Now, the other aspect is, once ETH 2.0 is there, I mean, it's kind of a new network. You know, it's for lack of a better term. You know, so how are exchanges going to engage with this? How are staking protocols going to engage with this? How are developers going to interact with the Ethereum network? You know, from both a project standpoint to an Ethereum development standpoint to basic things like Etherscan and just being able to track the network and seeing historical progress and things like that. So there's a bunch of questions still outstanding in relation to the operational success of the merge. Just because the merge happens doesn't mean all of the industry just like a light switch starts cooperating with it. So that's something that I hadn't actually taken into account until the past week as well, because we've heard many individuals say, it'll be fine, it'll be smooth, we're prepared, but we haven't heard any specifics. And if you haven't heard specifics from crypto companies, then assume there are none, just based on past performance. So I think there's just as much excitement as there is a question mark. And given the macroeconomic uncertainty, I think, ETH obviously had relative outperformance compared to nearly everything in the markets. I have a feeling that, it's tough for me to consider the ETH merge a bullish event other than the buy the rumor, sell the news style of the market. I don't want to buy it and hold it going into the merge, because I don't feel that is the best play historically for any upgrade, update, new thing in crypto. It's typically, you want to pump the rumor and you want to sell the news. Now, I think people are going to be excited, but I think there's obviously going to be a learning curve. There's going to be a transition. I don't know what that looks like. And because there's inherent risk, I don't want to overweight myself in terms of holding ETH. I would rather take the money from the very easy, nearly 100% trade over the past, 4 weeks, and then and walk away quietly with the opportunity to potentially, buy at current prices or lower. So talking about, you were talking about, the excitement. I was kind of sitting there like I should have kept my trade open because Ethereum was dropping a little bit. But in relation to the ETH trade, I don't know anyone who's like, I don't know anyone who's a casual Ethereum user who's like, damn, this is going to change my life. And I don't think it is for most people. And I think that's why it's not going to be as impactful, at least in the immediate time frame. I do think that it's a buy the rumor, sell the news style event. And I'm of course, you know this, I don't hold any crypto. I'm completely stabled up. I didn't even buy at the lows because I have a very good feeling we'll see them again. And I would rather buy the confirmation than buy in. I've obviously been trading back and forth. So nothing excites me right now, especially with the macroeconomic picture. And I don't think ETH 2.0 is going to be any different, although it is likely going to catalyze the industry and push, Ethereum is going to be in your face. I think a lot of developers are going to be excited. I think we'll see new things. It's potentially more environmentally friendly. It's potentially more scalable. So in that sense, excited. But from an asset performance standpoint, price, I'm not that excited.
Well, let's hit up one more subject then. You're under the mindset that we're going to see lower lows before culminating on a rebuilding process.
Lower or recent lows, yeah.
Okay, so what's your personal opinion? What's your weight? What are you waiting for? Like what levels?
So I want to see the revisiting of the lows again. So, I think if we see double digit or triple digit ETH again, I will likely start to dip my toes in. But the way that I'm looking at it is just the reaction to those levels, because I have a feeling that, so basically, if you're a macro bull, then the Fed is going to pivot soon and quantitative easing is going to begin at within the next 12 months, because the market's going to expect that. Now, inflation's at an all-time high, and the federal funds rate still has room to grow with multiple hikes coming. Mm-hmm. And although everybody's saying that we're not in a recession, GDP is still poor, and inflation is still cranking into every portion of the middle and lower class as well. So I do not see a light at the end of the tunnel yet, in my opinion, because I don't think that the Fed is going to be able to walk back anything that it's done anytime soon. And I have a feeling they're going to have to take a harder line stance as we move into the holiday season, because winter is coming and you're not going to feel the oil hurt until that happens. And it's still in Russia's best interest to impact the West at the right time in the most negative fashion. And I don't think anyone is really accounting for that, especially along with the fact of China and Taiwan having such contention as they do right now. So I don't see anything positive in terms of the macroeconomic picture. And I am personally calling bullshit on all of the euphoria in relation to the Fed. I understand why it's happening because we can see the top of the federal funds rate, but I don't see that being the true top of the federal funds rate with inflation right now. CPI would have to be literally 0% for 6 months just for inflation to come back to 5% by the end of the year, or 6% by the 5 to 6% by the end of the year. CPI has to be zero for the rest of the year for that to happen, just to get back to nearly triple the inflation goal. So, I mean, do we think that that's feasible? No. And do we think that the light at the end of the tunnel is going to get better heading into the winter? I highly doubt that. And so that's why, and myself and other macroeconomic people, I mean, I think Arthur Hayes is the only person who I would consider a macroeconomic expert who really thinks that the Fed is going to pivot soon. But why would the Fed pivot if inflation's at 8-9%? We could experience what we did in the 80s and have the double dip again, but that wouldn't help anybody. And Jerome Powell would get laughed out of history. He would literally get ruined for the rest of his life. So he's already near that cusp. And, I always worry a little bit when I'm this into an idea, but rarely is my true conviction wrong. And I have a very, very strong feeling that nothing that we're experiencing right now is as bad as it's going to get moving forward. I think that the onus is still on the bad actors to be bad actors.
You're very behind this.
I am. I mean, we saw, because, and you know why I'm strong about this is because I was completely wrong in March 2020. I said I was vehement that a W would occur. And what I missed is because, and due to my ignorance and youth, is that I missed how impactful the Fed's turning the spigot on would be. And I completely ignored that until it was too late. And of course, I bought in, enough to make money, but not early enough to have the largest impact. And so the one thing that I missed previously was the impact of the Fed and where things would go in terms of the money and the policy that the Fed was taking. And I'm not going to ignore that again, because I know exactly the policy the Fed is going to have to take with the lack of money now. So anyone who thinks that we're going to see a V is expecting the same exact policy stance as we saw 18 months, 24 months ago. And we're seeing the exact opposite policy stance now. So I don't see why the market would react the same way to a different policy stance with a completely scary and dark macroeconomic picture over our head without any assistance. Because last time it was scary and dark and there was a shit ton of assistance. We don't have a walker. We don't have a cane. We don't have crutches. We're limping. And I don't, limpers don't make good money.
If you had to put a guess, and I say guess, to when we're looking for that downturn in the market or that leveling out in the market, when would you say that is?
We should bottom Q4.
Oh, so you're talking about after midterms, you're talking about all the way into Q4, like November, December?
Yeah, I would say, because I think the best time to expect regulation would be Q4. So potentially like Congress, because Congress is not in session. They're gonna debate September. They may never do anything, but I think that the conversation will be heavy into Q4. And I think that if the federal funds rate is predicted to be easing by the end of next year, and I have a feeling that Jerome Powell is going to have to kick it up a bit towards the end of this year, I still think his target for easing is likely to come to fruition, which would be 12 to 18 months from now. I think like 14 to 16, better range. Then if he's going to have to crank it up and get serious to really, tone down things, then we have one final just kind of at the end, kind of in September, like probably late September into October, maybe November, depending on the inflation picture. And then from that, then we're like, okay, he really brought down the hammer. Now we're good. And then we should be coming out of regulation. So I would expect Q4 to really be the end, maybe into early Q1. That would be my expectation.
Yeah, I mean, I'm looking for, I'm around your time. I don't think it bleeds into next year. I think it sticks around the November, beginning of December mark. And then we go through a 12 to 16 month rebuild reset cycle, whatever you'd like to personally call it. I believe that this time next year will look very different than it does right now, just like this time last year looked very different than it did now. So I agree with you. I think this is going to be one of the shortest bear markets in crypto there is. And people are going to be pleasantly surprised. And that's one of the reasons I've been, obviously, we trade, Nick and I, and but this is one of the reasons I've been DCAing into various assets because, and mind you, really sticking heavily on protocol assets. Playing the numbers, it's almost like an odds race, right? So there's going to be a lot of shit that just falls apart. And it's like every other cycle. I mean, there's going to be things we won't remember in 2 years' time because they're just not here. Protocols, I believe it's the space race for protocols right now, and as we spoke about earlier with the merge, and I think that's really amping up Solana, Avalanche, and the likes. And I think that those are really going to be where the power plays are. So that's where I'm running heavy into as far as my longer investment thesis ideas. And I think this time next year, that's going to be proportionally larger in the wealth making opportunities. So sticking with the space race on the protocols for the next 12 months is primary for me.
Yeah, no, I agree. I think, anyone who's been around since 2017 knows that a lot of coins that were, darlings back then have died and not, they don't really either experience the same pump or the same interest. I have a feeling that'll be the same for the next cycle, but look at the ones that have survived and still had performance. They were typically, L1s that maintained activity. So like Alex said, Ethereum, obviously, Solana, Cosmos, Near Protocol. I think what's another one that I'm looking for? Cardano, obviously, another big one. And so large L1s that have come off their highs, a large amount that don't have insane staking rewards and that still have some protocol developments. They'll likely be good ones. And then if you're trading, the two things I look for are volatility and liquidity. So Alex and I like to trade decentralized derivatives, and although there are hundreds of millions and potentially a billion happening in volume per day, there are low volume assets, and the spread on those assets will kill you even if you have a good trade. You can make 0.5% scalp and lose 0.2% on the spread because you're not paying attention. So if you are trading, if you're in the Trade the Chain community, tag us, reach out. We will definitely, give you granular, acute information on where to look and how to attack these things. But another thing that hurts me and people ask me about is, what assets to trade. I typically only trade Bitcoin, Ethereum, and Solana. And occasionally, something like Ethereum Classic if there's 9 figures in volume. But I need to see a spread that is, less than 0.1% to really get me out of bed, or else I'm just losing money on a trade. Because sometimes, your limit orders are not. Sometimes you have to make market orders. So that's how things look. So that's why I typically only track a few assets. Also, try to do 4 or 5 tasks at the same time and tell me how good you are. Each asset is different, so you can't trade a million assets. You really need to stick to the ones that have volatility and liquidity, and that and can understand. And that's why I stick to my top 3. So it looks like these are the ones that you trade, Alex, or these are the ones that you're looking at for potentially long-term bets.
Yeah, these are a few of the main long-term investments that I got going on. So it's
yeah, there you go. Yeah, AVAX, I completely forgot that one. Matic has been what are the ZK ETH stuff that's coming up? That was in Coinbase Institutional was even writing about them, or ZK.
Let me tell you something. ZK Zero Knowledge is going to really revolutionize a lot of things over the next 12 months. So definitely, folks, keep a lookout on the zero knowledge stuff being built, because that's going to be pretty much the gold standard for the current term. Let's see, what do we got other than BTC? Only 3. I like it. Phoenix keeping stats. It's like baseball.
Oh yeah, I always forget to click the comments. Yeah, please ask questions if you have any in the comments.
A couple of Voyager questions. Listen, there's a meeting on August 4th, right? 3 days. We're gonna find out more. They better not be gone. Listen, we're getting our USD back. I know that for sure, but they better not be gone total. It's a lot of hard work in that Voyager account of mine.
Well, I guess I don't want to drop too much, but we do have a replacement application coming on the way that we've been vigorously testing and finalizing over the past several weeks. So
listen, you know what I am now? I'm a DeFi maxi. That's what I'm slowly turning into.
You have to be. I introduced you to the decentralized derivatives, and we've been absolutely loving life. I mean, there's rewards, there's trust, I'm custodying my own stuff. No one's taking hold of anything.
There is.
It's all in my wallet with my keys.
Yeah. No, and by the way, a lot of people asking us for a tutorial on Didex. So you and I are going to have to sit down and pump one out for the folks and show them what truly, decentralized trading looks like. It's pretty cool. And then, of course, within the next month we'll be demonstrating and unveiling something else. So it'll be exciting times. All right, folks, thanks for joining us today. Happy August 1st. Happy Monday. New month, new day, new week, new opportunities, and keep that mindset good and continue to hang on to your handlebars. Please smash the like button on your way out. We really appreciate it. See Lucas in the chat. Lucas, thank you for joining us, sir, and everybody else as well. Never Quit, Mad Slug, Egon, Phoenix. We appreciate it. So thanks, folks, and we'll see you tomorrow at the same time.